Hello, Accounting 101 students. This is your instructor, Ron Santos, and this is a tutorial on merchandising sales. I want you to notice the T accounts for sales, where we had merchandise inventory for purchases was a catch-all for all costs. Sales, on the other hand, have their own accounts. So we have a sales account, which is known as equity account. It's an income statement account. Revenue account. This is the normal balance, same as owner's equity. When we have a sales return or allowance, we have a contra account. Notice the debit side increases on the sales returns and allowance, which effectively decreases the sale. Also, we have a sales discount. It has its own account. And we'll be dealing mostly with the assets, our cash, accounts receivable, and merchandise inventory. At this time, I want you to look at this formula box we have here. This would be the top of your multi-step income statement. And, the formulas are in here. Sales minus sales returns and allowances minus sales discount equals net sales. Minus cost of the merchandise sold, or cost of goods sold, equals the gross profit made on the sale. So I've set up some T accounts and some journal entries to go over sales. In this case, we're using the accounts receivable. We had a sale for A is a sale for $120, which is the credit, and the debit is to accounts receivable for $120. And here's your journal entry. It's a four-part entry. All sales have a four-part entry. This covers the gross, or the sales, the amount, and the cost of goods sold and merchandise inventory account for the cost of that inventory. The difference between the two will be the gross profit, but you will always have this four-part entry, starting with the sales and ending with cost of goods sold and merchandise inventory. So this cost of goods sold is the expense, how much that inventory cost us, and we'll be deducting it from merchandise inventory. Next, we have a sales return. We found that a customer returned some merchandise to us. So they returned approximately half, $60 worth, and so we will debit the sales returns and allowance for the $60, reducing the sale, and we will reduce the accounts receivable by $60. Okay, so the customer returned $60 worth of the merchandise, or half the merchandise. So that covers the sale portion. We also have to put it back into inventory. So merchandise inventory, the cost of the merchandise returned was $28. So we add it back to merchandise inventory. And then we credit cost of goods sold, the expense. We finally see a credit to an expense account. So we're basically deducting that expense out, reversing the entry. So we have the returns. We had the sale for $120. We had $60 of it returned. Merchandise inventory was put back. And then finally, we have a payment. There was a $5 discount for paying on time. So the accounts receivable, $60 balance, remember the sale was for $120 minus what they returned. So they have a $60 balance. So the accounts receivable has to be credited for the $60. There was a $5 discount. There's a debit to sales discounts for $5. And then, of course, cash, the difference between it. So $55 debited for cash, the payment. There was a $5 sales discount. Those are the two debits. And the accounts receivable comes off for the full amount of $60. One last piece, there was a delivery expense. So this would have been FOB destination, which means the title to the merchandise passed at the destination. So as we're selling it, we're responsible for transportation. It has its own expense. So that was $20. So we incurred a $20 expense, and cash went out for D for $20 to whoever our carrier was, U.S. Postal Service, UPS, what have you. Notice that the delivery is separate. Okay, when we did purchases, merchandise inventory was the catch-all for merchandise returns and allowances, for purchase returns and allowances and purchase discounts. But on the sale, we want to separate them out, and they have their own. These are two new contra accounts: sales returns and allowance, sales discounts. So I hope this tutorial was beneficial to you, and I will see you on our next tutorial. Have a great day.